this video, I'm going to be reading about a kind of advanced accounting, tax accounting topic, mostly related to research and interpretive authority. As we see here, this is something you really only get into if you are studying accounting or maybe law, something you could see in law school. But this is primarily for tax research. This is about as boring as it gets. So if this doesn't put you to sleep, you probably just have insomnia, because it's going to be a struggle for me to make it through this video, and I'm the one reading it. Okay, let's begin. As was discussed in Chapter 3, the Internal Revenue Code of 1986, as amended, is generally considered to be the tax law, even though it is clear that the Constitution, international treaties, and state statutes also are the law, and that they may have a role to play regarding federal tax issues. However, there is no such thing as a perfectly written statute that is clearly applicable to all intended situations and easily understood by everyone. As situations arise where it is unclear how a statute applies, interpreting tribunals are called upon to provide clarification. When this clarification is provided in a formal manner, documentation is created. This documentation constitutes a body of interpretive authority reference to which is useful for understanding substantive principles of law, as well as for assisting in the resolution of specific issues which may arise in the future. All of the interpretive authority that we may refer to during the course of a tax research engagement can be classified into two general categories. The first category is called primary interpretive authority. Primary interpretive authority. This category includes interpretive authority that the courts are willing to treat as having the value of precedent. When they employ the reasoning from authority technique, it includes the legislative history associated with the enactments of statutes, all judicial authority and administrative authority in the form of treasury regulations, revenue rulings, and revenue procedures. The second category is called secondary interpretive authority. Secondary interpretive authority. This category includes all interpretive authority that the courts will only treat as evidence. Primary, precedent, secondary, evidence. Primary, precedent, secondary, evidence. When the reasoning from authority technique is employed, it includes all administrative pronouncements other than treasury regulations, revenue rulings, and revenue procedures. All tax services, including annotative types as well as treaty types, all single-topic tax treaties, all journal articles, all tax law citators, all tax newsletters, all computerized databases, and all firm research files. In addition, there are a number of other miscellaneous sources of secondary interpretive authority. These include various classified digest of court decisions, audio and videotape cassettes concerning the federal tax law, and various tax planning aids. As a result of this difference in the way the courts view each category of interpretive authority, it is clear that secondary interpretive authority does not have the force and effect of law. Thus, substantive principles of law cannot be inductively derived from such authority. In other words, secondary interpretive authorities generally should not be cited as supporting authorities for an apparently applicable substantive principle of law. However, it is inappropriate to cite secondary interpretive authorities when primary authorities are non-existent. Second authority guidelines also appropriate to cite secondary interpretive authorities as supplementing authorities. It follows that we use secondary interpretive authorities in tax research almost solely for the purpose of locating primary authorities. We use secondary interpretive authority almost solely for locating primary interpretive authorities. Making reference to interpretive authority in order to interpret statutory language was called the coattail option in Chapter 3 of these materials. This is because under this option, we utilize the analytical skills of other individuals. Obviously, we can utilize the coattail option in order to resolve any tax issue. Thus, we may consider the relevant material contained in a treaty and accept the conclusions of the author concerning the resolution of a tax issue. We may examine the relevant tax articles and accept the conclusions of particular commentators concerning the resolution of a tax issue. We may utilize one or more of the existing tax services and accept the conclusions of the editors concerning the resolution of a tax issue, and or we may analyze existing administrative and judicial interpretive authority in order to formulate an individual professional opinion concerning the resolution of a tax issue. The rest of this chapter will discuss in general terms how to use existing primary interpretive authority in order to formulate an individual professional opinion concerning the resolution of a tax issue. Specifically, we will consider how interpretive authority is selected and used, the legal nature of interpretive authority, how to brief interpretive authority, and how to assess the usefulness of interpretive authority. In Chapters 5, 6, and 7, we will discuss in greater detail how each type of interpretive authority may be used by the tax practitioner in order to resolve tax issues. Sorry about that. Lawn people outside just got too loud, so I kept reading for a bit, and then I just decided it was too much, and I listened to the audio, and I had to cut a lot of it out, so we're skipping some stuff, but I'm sure you don't really care. Let's continue. The legal nature of interpretive authority. Lawyers classify areas of uncertainty or legal issues either as pure questions of law or as pure questions of fact. In reality, legal issues do not fit into two discrete categories, but rather may be classified along a continuum, the extremes of which are pure questions of law and pure questions of fact. In other words, many legal issues probably involve some combination of the two extremes. They are mixed questions. In any case, tax issues are legal issues, and as such they may be classified in this manner. In general, a pure question of law arises when there is uncertainty concerning what the law is. In other words, the facts are clear but the legal treatment rules uncertain, because the law is either uncertain or in dispute. Questions of law usually are resolved by reading, interpreting, and understanding substantive principles of law somewhat independently of the facts which created the uncertainty. As was explained in Chapter 3 of these materials, if the principles of law are statutory provisions, it is necessary to interpret the literal words of the statute in light of the congressional intent associated with those words. On the other hand, a pure question of fact issue arises when the law is clear, but the facts are in dispute. A pure question of fact is always resolved by a preponderance of the evidence. However, preponderance of the evidence is not a pure quantitative standard. A subjective weighting of each piece of evidence is also involved in the decision. For example, assume that we find 3 pieces of evidence in support of conclusion X and 5 pieces of evidence in support of an opposite conclusion. Nevertheless, we may reach conclusion X if we feel the smaller quantity of evidence in support of that conclusion is more important than the large quantity of evidence in support of the opposite conclusion. Although this distinction is definitely vague, it is useful and it is practical to apply it in the area of tax law. We can see that this is the case by using these general concepts to determine whether each of the 5 broad areas of potential uncertainty that are associated with tax decisions are pure questions of law, pure questions of fact, or mixed questions as follows. First, the facts may be uncertain. Generally, we can clarify the facts to our own satisfaction. It follows that this type of uncertainty typically arises when no there is a dispute between the IRS and a taxpayer. For example, if the taxpayer claims to have used his or her automobile for business 75% of the time, but the IRS contends that it was so used only 20% of the time, the extent of the business use of the automobile is a disputed fact. Since this type of uncertainty involves disputed facts by definition, and since it can only be resolved by preponderance of the evidence, legal theorists would all agree that it is properly classified as a pure question of fact issue. In fact, in a purely theoretical sense, this is the only type of uncertainty that is correctly classified as a pure question of fact. Second, given that we have located all of the tax treatment rules that might possibly apply to the agreed upon facts, we may be uncertain regarding the identity of the propositions that are associated with each tax treatment rule. Legal theorists would probably agree that this is the type of uncertainty that is properly classified as a pure question of law. This is because of the resolution of this issue requires us to read and interpret statutory and or common law substantive principles of law somewhat independently of any facts. Third, given that we have properly identified each of the propositions to be proven that are associated with any particular tax treatment rule, we may be uncertain exactly what it is that one or more of these propositions is requiring us to prove. Again, since the resolution of this issue involves reading, interpreting, and understanding substantive principles of law somewhat independently of any facts, legal theorists would probably all agree that this type of uncertainty is properly classified as a pure question of law. Fourth, we may be uncertain whether a particular proposition to be proven has, in fact, been proven by the available facts. In the case of a tax dispute, the parties to disagreement will agree concerning exactly what it is that must be proven, but they would disagree concerning whether the facts associated with the situation actually prove that which must be proven. Many legal theorists would probably argue that this type of uncertainty is properly classified as a question of law, and they may be correct in pursuing theoretical sense. However, it is also theoretically arguable that this type of uncertainty is a question of fact. This is because questions of fact are always resolved by preponderance of the evidence, and the only logical way to resolve this type of uncertainty is by considering the quantity of the facts supporting each possible conclusion, as well as the subjective weighting associated with such facts. Thus, even in a theoretical sense, it is arguable that this type of uncertainty is a question of fact. Perhaps this uncertainty regarding classification means that this issue is a mixed question of law and fact. However, because it makes more practical sense for a tax practitioner to treat this type of uncertainty as a pure question of fact, these materials will treat this issue in that manner. Fifth, the proper application of a correct tax treatment rule to some agreed upon facts may be uncertain. In other words, the facts that are related to the particular situation are clear to all concerned parties. Furthermore, the correct tax treatment rule is clearly identified. However, the tax liability which results from the application of that correct tax treatment rule is uncertain. Many legal theorists would probably argue that this type of uncertainty is properly classified as a pure question of law. However, since it cannot be resolved by reading, interpreting, and understanding substantive principles of law independently of the facts, it is arguable that it is not a pure question of law. In addition, it is clear that it is not a pure fact question since it cannot be resolved by preponderance of the evidence. Therefore, these materials will treat this type of uncertainty as a mixed question of law and fact. The legal category that any particular tax issue fits within has implications concerning the characteristics of any interpretive authority that we are likely to find that relates to that issue, the quantity of that authority, and the legal effect of that authority. The characteristics of the relevant interpretive authority. When we seek to specify the characteristics of the interpretive authority or precedent that is relevant to our issue, we are really interested in describing the characteristics of the underlying reasoning in such precedent. If we know whether our uncertainty involves a question of law, a mixed question, or a question of fact, then we can anticipate the characteristics of the underlying reasoning of any interpretive authority that we are likely to find. Similarly, if we are not sure whether the uncertainty that we are experiencing is a pure question of law, a mixed question, or a pure question of fact, as we find relevant interpretive authority, the characteristics of the underlying reasoning of that authority can help us determine the type of issue that we are faced with. In the case of a pure question of law issue, the underlying reasoning of any relevant interpretive authority will be characterized by references to dictionaries, various intrinsic and extrinsic aids useful for ascertaining congressional intent, i.e. committee reports, floor debate, public statements by lawmakers, staff, reports, etc., and to general public policy. Some authorities may address whether a particular proposition to be proven that is not explicitly stated in the statute is, in fact, implied by the statutory language. Some authorities may identify the propositions to be proven and then attempt to state different verbal formulations of these propositions, i.e., to redefine the propositions, possibly with different evidence being associated with these redefined propositions. In this case, if the original propositions will remain viable, with the new propositions to be proven applicable only to the specified facts. Therefore, the original propositions are simply being modified to deal with a particular set of facts that was not appropriately addressed by the original propositions. In the case of a mixed question, the characteristics of the underlying reasoning of any relevant interpretive authority is more difficult to anticipate. Some precedent will seem to treat the issue as a pure question of law, while other precedent will seem to treat the issue as a pure question of fact. It follows that the underlying reasoning may contain all of the characteristics associated with pure questions of law, all of the characteristics associated with pure questions of fact, or any combination of these characteristics. Therefore, the only recourse we have is to analyze the type of uncertainty that is involved in order to figure out whether this issue is a mixed question. We have already stated that interpretive authority is dealing with a mixed question when the only uncertainty is the amount of tax that results from applying a given correct tax treatment rule to some agreed upon facts. Interpretive authority addressing this type of issue will simply state the facts and the correct tax treatment rule without a great deal of discussion. Thus, the great bulk of the underlying reasoning will address the mechanics associated with applying the tax treatment rule to the specified facts. Similarly, if the uncertainty involves the scope of a particular statute, the interpretive authority is generally dealing with a mixed question. Finally, interpretive authority that focuses on which of the two alternative tax treatment rules are applicable to a particular set of facts is generally dealing with a mixed question. This is because such authority usually must determine what a taxpayer must prove, as well as whether the facts prove that which must be proven. In the case of a pure question of fact issue, the underlying reasoning of any relevant interpretive authority will exhibit two distinctive characteristics. Okay, first, propositions to be proved will be stated with little or no elaboration and or discussion. Second, the primary focus will be on describing what took place or what happened, and on analyzing whether such evidence in fact proves the relevant propositions to be proved. The quantity of the relevant interpretive authority. There generally is not a large quantity of interpretive authority dealing with a pure question of law issue. This is because the first analysis undertaken for the purpose of determining and understanding the uncertain propositions to be proven is usually as complete as it is possible to be. Therefore, any subsequent analysis would be redundant. The exception to this is the general observation occurs when a logical analysis results in at least two equally plausible but opposite propositions from the same statutory wording. In the case of a mixed question, there is likely to be a large quantity of interpretive material if the mixed question tends toward a pure question of fact. On the other hand, there is likely to be a small quantity if the mixed question tends toward a pure question of law. As noted above, pure questions of fact issue are resolved by preponderance of the evidence. Therefore, small differences in facts can cause opposite conclusions. In addition, different interpreting tribunals can subjectively weight evidence differently. Finally, different interpreting tribunals can have different concepts of what is fair, equitable, and just. It follows that pure fact issues can generate huge quantities of precedent when their uncertainty involves situations encountered by a large number of taxpayers. Okay, let's go back for a second. So we have a pure question of law. We have a pure question of fact, and we have mixed question. Chapter 2, it was shown that the common law substantive principles are inductively derived from interpretive authority, and that the statutory principles of law are derived from the Internal Revenue Code of 1986 as amended. Up until now, we have talked about common law substantive principles of law and statutory principles of law as if they were identical. The fact is that statutory principles of law are mandatory in the sense that they must always be followed. On the other hand, some common law substantive principles of law are mandatory and some are merely suggestive. Therefore, it is not only necessary to identify any interpretive authority that may be relevant, but also it is necessary to determine its legal effect. The phrase legal effect of interpretive authority is obviously referring to the legal effect of any common law substantive principles of law that are inductively derived from that interpretive authority. Thus, there can be a different legal effect associated with each uncertainty that is clarified by a particular authority. The legal effect of interpretive authority in text research refers to the degree of uncertainty that the authority provides with respect to an answer to the uncertainty being researched. Degree of uncertainty is measured on a scale from mandatory that the interpretive authority be followed to merely suggestive of the proper resolution of uncertainty. In other words, mandatory authority is very strong authority because it carries the full force and effect of law, and if relevant, it must impact on the resolution of the uncertainty. On the other hand, suggestive authority is very weak authority because it merely indicates an arguable resolution of the uncertainty. The descriptive phrases most commonly encountered in connection with legal effect of interpretive authority include mandatory, strongly, persuasive, okay, and suggestive, persuasive. Obviously, authority that is mandatory provides more certainty and therefore has a stronger legal effect than suggestive authority, obviously. Although it is unlikely that any clarification is ever entirely free of interpreting tribunals' subjective reactions, it is arguable that this subjectively is inevitably the greatest in the determination of fact issues. This is because that determination depends on the preponderance of the evidence presented, and an individual reaction to evidence varies. For example, different interpreting tribunals may subjectively weigh evidence differently and thereby reach opposite conclusions. In addition, different interpreting tribunals may have different concepts of what is fair, equitable, and just, and thereby reach opposite conclusions. It follows that any interpretive authority which clarifies pure fact issues is mandatory only if the facts associated with any future uncertainty are very similar to the facts described in interpretive authority. So mandatory only if the facts associated are very similar to the facts described. Through the process of eroding the mandatory status of an interpretive authority, we explicitly recognize that reasonable professionals can reach opposite conclusions concerning the weighting of evidence as well as concerning what constitutes a fair, equitable, and just result. This treatment is also consistent with the doctrine of stare decisis, which says, when a court has laid down a principle of law applicable to a certain state of facts, it will adhere to that principle and apply it to all future cases where the facts are substantially the same, so as not to disturb a settled point. In contrast, questions of law usually are concerned with identifying, explaining, clarifying, modifying, and otherwise determining exactly what a taxpayer must prove before a particular tax treatment rule can be applied to his or her facts. Since this determination generally is made relatively independent of any facts, it is a much more objective process than evaluating evidence. Given that the legal nature of a particular uncertainty that has been clarified is going to have an impact on the legal effect of the interpretive authority that provided the clarification, the question arises as how to carry out this policy. The solution is found in the conventions that have evolved regarding how to determine the propositions to be proven that will be associated with any tax treatment rules which are inductively derived from interpretive authority. Wow. Specifically, when the uncertainty involves a question of fact, each fact that is crucial to any relevant decision by the interpreting tribunal apparently is to be treated as a proposition to be proven. When the substantive principle of law that is inductively derived from that decision is stated, the practical effect of making each fact a proposition to be proven is to restrict the mandatory status of the inductively derived tax treatment rule as a guide for resolving future uncertainties. This will happen because the facts associated with any future uncertainty will not prove all of the propositions to be proven that are contained in the inductively derived principle of very similar to the facts described in the interpretive authority. Therefore, any substantive principle of law that is inductively derived from the clarification of a question of fact is to be stated narrowly. Any substantive principle of law that is inductively derived from the clarification of a question of fact is to be stated narrowly, in the same sense that all facts crucial to this decision become propositions to be proven in order to restrict its mandatory status as a guide for resolving future uncertainties. On the other hand, when the uncertainty involves a question of law, it is appropriate to state any substantive principle of law which is inductively derived from interpretive authority abstractly, in the sense that the precise facts which originally caused the uncertainty do not become propositions to be proven. This is because these holdings, i.e., which generally are concerned with identifying, explaining, clarifying, modifying, and otherwise determining exactly what a taxpayer must prove to be blah 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 blah, usually irrelevant to a very broad treatment rule, can be applied to as a fact, usually relevant to a very broad range of similar situations. Therefore, it is inappropriate to constrain their applicability to range to situations with facts virtually identical to the specific situation which prompted the uncertainty. The practical effect of stating a substantive principle of law without making each fact a proposition to be proven is to broaden the future application of the tax treatment rule, which is formulated as part of that particular substantive principle of law. This result occurs because there are fewer propositions to be proven in the inductively derived principle of law. Therefore, any substantive principle of law which is inductively derived from a clarification of a question of law is to be stated abstractly, in the sense that the precise facts which created the uncertainty do not become propositions to be proven, in order to broaden its mandatory status as a guide for resolving future uncertainties. I have this section starred because I was told it will be very important. Okay, let's continue. Briefing interpretive authority. Star. Given that there is a body of interpretive authority, that common law substantive principles of law are inductively derived from such authority, and that such inductively derived common law substantive principles of law are available to be deductively related to any fact situations which may arise in the future, perhaps it is not surprising that formal procedures have developed in the practice of law for summarizing the contents of any legal authority. That was a long sentence, so I'm going to reread that. Given that there is a body of interpretive authority, that common law substantive principles of law are inductively derived from such authority, and that such inductively derived common law substantive principles of law are available to be deductively related to any fact situations which may arise in the future, perhaps it is not surprising that formal procedures have developed in the practice of law for summarizing the contents of any legal authority. Okay, that whole sentence just to say they like to summarize court cases. Wow. I'm gonna add a note. They summarize court cases. A formal written outline of the contents of any legal authority is referred to as a brief. So that's what a brief is. Of that authority. In a pure technical sense, the term brief is reserved for formal summaries of judicial authority. However, in a practical sense, we can brief any interpretive authority that is concerned with the application of tax law to a specified set of facts. A complete brief contains 5 parts. In practice, however, some of these parts may be omitted. The 5 parts include the authority citation, a statement of the facts, a statement of the issues or questions, a summary of the logic or reasoning associated with resolving the issue, and the holding. In addition, and it is probably a good idea to add a 6-part summarizing the substantive principles of law that is inductively derived from the interpretive authority. It is this principle that is deductively applied in order to guide the resolution of uncertainties that arise in the future. Each 6 of these parts will be elaborated upon in the sections which follow. So I'm going to add here 5 parts of authority citation. This part of the brief provides the information necessary for any reader to find the full text of the particular authority. The judicial history of a court decision may also be provided here. Okay, so it's just a citation. So citation. Statement of the facts. As noted previously, the term facts refers to everything that actually happened in connection with any particular situation. So, it's just the facts. I'm skipping. Statement of the issues or questions. It is important for us to understand that any particular interpretive authority may consider many different issues, some of which relate to the particular uncertainty currently being investigated, some of which completely unrelated to this uncertainty. That made no sense. Clearly, it is necessary to state only those issues which are relevant to the subject being researched. Okay, so it's just a statement of issues or questions. Straightforward. Summary of the underlying logic. This part of the brief is purely optional, and probably will be omitted a great deal of the time. However, if the underlying reasoning is included in a brief, it should consist entirely of ratio decidendi. The term ratio decidendi refers to all reasoning and statements that are essential to interpreting the tribunal's decision based on the facts and issues before it. It should be distinguished from the term stare decisis, which refers to a judicial doctrine which holds that once a court has laid down a principle of law applicable to a certain state of facts, it will adhere to that principle and apply it to all future cases where the facts are substantially the same, so as not to disturb a settled point. We should make every effort to exclude dicta. The term dicta refers to any statements and reasoning that is not crucial to resolving the issues associated with particular authority, as well as to any unrelated conclusions. In other words, it is something extraneous that has just been thrown in by the interpreting tribunal. In the case of a court decision, it reflects opinions of the court that are not relevant to the determination of the issue before the court and are thus of no value as precedent. And then the holding. The holding or the decision is generally at most one or two sentences identifying the legal treatment rule applied and the effect of its application on the taxpayers. Again, it is appropriate to note that any particular interpretive authority may consider many different issues, some of which relate to a particular uncertainty currently being investigated by the tax researcher, and some of which are completely unrelated to this uncertainty. Clearly, it is necessary to state the holding or decision only with respect to those issues which are relevant to the subject being researched when writing a brief. Okay. We have substantive principles of law, which we're going to skip over. And I'm going to read one of these briefs, and that will be the end. So we'll do this one. Brief of the Jordan Marsh case. Citation: Jordan Marsh v. Commissioner. 2. The facts. Jordan Marsh sold its fee simple interest in a department store for $2.3 million. Its basis in the store being $3 million. The purchaser immediately leased the property back to Jordan Marsh for 30 years, 3 days, with an option to renew for another 30 years. The primary consideration was finding a friendly landlord, and the property would not have been sold unless the purchaser agreed to a long-term lease. The facts supported the conclusion that the fair market value of the property at the time of the sale was $2.3 million, and the government conceded this point. The facts showed that the rent to be paid by Jordan Marsh was equal to the fair rental value, and the government conceded this point. The purchaser was not tax exempt and thus would pay all taxes levied against these activities associated with the property. Issues. Is the transaction described in the facts as a sale on which the taxpayer recognized a deductible loss or an exchange under IRC section 1031? Is the leasehold interest received like kind relative to the fee simple interest given up? Is the loss which is not recognized because of IRC section 1031C equal to the basis of the leasehold which can be amortized over the term of the lease? Reasoning. In Jordan Marsh, the Second Circuit sought to determine whether there was an exchange using the normal everyday reasonable man distinction between the term sale and the term exchange. In other words, an exchange versus other disposition area, the proposition to be proven in the Second Circuit's view is whether or not there has been a transfer of property solely for cash or cash equivalent in an amount fully equal to its fair market value. Using this approach, the two critical facts become the fair market value of the property conveyed relative to the cash received. In this case, the facts showed and the government conceded that the fair market value of the property disposed of was $2.3 million, which is amount equal to the cash received. The fair market value of the leasehold, in this case, the government conceded that the leasehold had no fair market value, since the rent to be paid was equal to the full fair rental value. Since the leasehold had no value to Jordan Marsh, it cannot be argued that it was the consideration received. Rather, it was merely condition precedent to the sale. This conclusion was confirmed by the fact that the cash received was equal to the fair market value of the department store disposed of. Therefore, there was no exchange, and IRC Section 1031 was not applicable. 5. The holding. The Second Circuit held that the transaction involved was a sale. Obviously, the loss was deductible, as IRC Section 1031 applies only if the transaction is an exchange. It follows that this court found it unnecessary to address the other two issues.